Hello everyone, I'm excited to bring you an exclusive trade that I've been holding on to. After reviewing my archives, I realized that I never shared it on YouTube before. Rest assured that it's a fantastic trade opportunity that required careful analysis to ensure profitability. I genuinely believe it holds immense value, which is why I'm sharing it now. This is the kind of trade that I continue to implement and actively manage. So without further ado, let's dive into the details, and I hope you find it valuable and enjoyable. Okay, so on the first day was the 13th of November, 2019. The market went down some, and I did put on a put spread. I was hoping that the market would go down a little bit further, but it didn't. So I ended up with 10 lot of 30-20, 30-15 put spread for 20 November. And then I did add 30 November 19, 31-35, 31-40 call spread. Collected a total of $1,600 on this trade, and then went on to the next day here on the 14th. And so, the market wasn't going lower, and so I went ahead and added a 30-30, 30-25 put spread, same expiration for 35 cents, and collected another $350 on it. All right. Again, I was hoping that the market would go down a little bit further so I can leg into another position, but it actually didn't. It actually went up, and I was stuck with an unbalanced position. And what I needed to do was move up and out the call spread so it wouldn't be in danger any longer. So I wanted to maintain balance here. And so it went within my 20-point limit of the short leg. And so I moved it up to, from 31.35 to 31.55 and moved it out a couple more days. Now that particular adjustment cost me 50 cents. So it was a debit of 50 cents. Okay. And so I had to pay $1,500 in order to adjust that trade. Now, on the other hand, the two put spreads that I had put on managed to close throughout the day for 10 cents. So I got a nice profit on the put spreads. And then I put on another put spread, and this time 30 contracts, 30.70, 30.65, and I collected 50-cent premium. So now think about it, right? I had put on two put spreads. I already got out of that trade. I made a profit. And then I adjusted the trade for a net debit of break even. I had to take a debit of 50 cents and I took a credit of 50 cents on the put spread. So I'm already ahead in this trade. The next few days, actually, the market stayed within range, and I did close the 30, 70, 65 positions for 20 cents. So it was more than 50% profit on the credit of that trade. And the next day, on the 20th, the market did move down a little bit, and we got some decay and actually closed the call spread for 10 cents. So all in all, you can see here as the running total went through, right, that I collected a total return of $850 on this trade. This is a typical trade that happens. I don't close them out for losses, and I don't wait until they get breached. I manage the trade as we go along, and I've done this over and over again, allowing me basically since April not to take a loss on a 70 TE trade, and I think I've done over 100 of these already. All right, so hopefully this was of value to you, and we'll see you soon. Thanks a lot.